Welcome to the podcast that unveils the future of investing. In each episode, we explore asset classes, trends, and technologies with founders, investors, and experts involved into shaping that future.
Welcome to the Fintech Files, and today I'm with Alex and Kostas, the co-founders of WealthyHood, the first DIY wealth building app for long-term investors. Alex, Kostas, welcome to the show.
Thanks for having us, George. It's great to be here with you. Our pleasure.
It's great to have you here. And for the listeners who are wondering, there is definitely a Greek connection here between George, Alexandros, and Konstantinos. But what we're here for is to talk about the future of investing, but also to understand the entrepreneurial journey that led Kostas and Alex to start WealthyHood. So could we start from that? How did you guys meet and how did you guys decide to launch a business?
Sure. We met during our undergrad years. Actually, we both studied together electrical and computer engineering in Athens. This is 13 years ago. So we have been friends for the past 13 years. And of course, we worked in many uni projects back then. Our ways were quite different from then on. I'll talk about my path. I went to London, did a master's in health economics, worked for a few years in the information systems, and then I decided to switch to, I joined Morgan Stanley there for a year and a half, and it was then when we decided with Kostas to start our own journey. Different company in the beginning, not WealthyHood, another project.
Yeah, as Alex said, we actually met at the uni 13 years ago. We have been friends since then. We went to London at the same period after graduating from uni. I also studied there at Imperial College, and after that I have been working as a software engineer. And I think that taking the path of starting a startup, at least in my mind, it started in London, and that's why I followed that professional career of first joining a startup as a first employee, and then joining a larger organization where I was at PlayStation as a senior software engineer to have an experience of both of those two very different worlds. And while I was there, I felt like I have that experience now and the confidence of starting my own venture. And Alex was a person that I knew very well, admired his skills. I knew that he wanted to follow a similar path. And we decided to build a team and start something in the investment space.
Great. And it's really lucky, or at least nice to see how your skills are complementary. I think, Alex, you studied investment management, and then there's the technical side. So
Correct, yeah.
team to launch a fintech app. And can we go now a bit more into WealthyHood? What's the rationale and what's different from other investing app?
Sure. So essentially, we have the belief that if you're a very good individual, the investing world is very easy for you to navigate. You have access to all these wealth managers and financial advisors and access to every single investment opportunity you can think of. Things are very different when we consider the rest 99.9% of us. So all of us who are not that wealthy and don't have access to all these professionals. And if we're talking about millennials and investing through a mobile app or an online app, our options are quite limited. So when we began the journey, we saw that there are about 100 million millennials in Europe and the UK, and they only have two options. Option number one is they can pick a trading app. So there are many guys like Freetrade, eToro, Trading212, and Robinhood in the US. A few of them are well established. The problem here is that all these apps cultivate a mentality of gamblers. So they make it very easy for you to access the stock market, buy stocks in a cheap and user-friendly way. But the problem is that users end up gambling. They end up trying to become millionaires overnight and not following any sort of robust investment principles. On the other extreme of the market, we saw a quite recent innovation, let's put it that way. It was the robot advisor. So guys like Nutmeg, Wealthify, and Money Farm, and the likes. They tried to solve the problem by creating another problem. So essentially, you open these robot advisor apps in 5 portfolios based on your risk preferences. There are 3 problems here. Problem number one is that these guys offer low personalization. They don't care if you, George, want to invest in tech, biotech, or anything else. You have to pick one with the 5 pre-made portfolios. The second problem is that you have no control. You can only put money in or take money out of the app. You cannot sell or buy individual assets or change the allocation that you have been given. And the third problem is that to give you this portfolio template and rebalance every once a year, they charge you from 0.75 to 1% depending on the app. Now, this may sound small, but if you're investing for your retirement, if you're in your 20s or 30s, investing for the next 30 years, this may translate to more than 1/3 of your wealth, not ending up into your pocket, but ending up into fees to your robo-advisory. So we thought, okay, these two extremes are definitely not the ideal experience. Let's create something that focuses on the beginner investor, take them by hand, help them create a well-diversified but very personalized portfolio, and then give them all the tools to automatically maintain it over time. So WealthyHood is built around two principles: creating long-term portfolios and investing for the long term. And the second is have all this automation that makes it easy for users to invest periodically, to rebalance their portfolios, and essentially navigate the tough financial markets of our time.
Great. And maybe just for the user. So I am a user of the product, and indeed I can see how it's quite different from using a trading app, which I also use. Because instead of trading, I allocate, etc. But can you tell us a little bit about the experience that users get and describe it?
Yeah. So the main thing that we're currently focused in the experience we're building is the easy to get started part. So without knowing too much about investments, we take you through the whole process from starting from scratch to ending up to a complete well-diversified portfolio. And that's broken down into some very simple steps that we walk you through. Selecting the asset classes that you want to invest in, selecting the geographies that you want to get exposure to, selecting sectors and industries that match your preferences. And then having said that, which gives you a template of how your portfolio you want it to look like, then it's up to selecting the risk that you want your portfolio to have. And at that point, you may, after those steps, you may still want to be able to add or remove assets. And at the final step, you select how you want those assets to be allocated. We make it easy for you because we write some optimization algorithms that, given the risk that you select, we give an output and optimized portfolio. But that portfolio, you can still further change the allocation to match your preferences. So these are the steps in the whole process of getting started. Those personalization preferences, the risk, and the allocation, you don't have to do much, but you have a say in the whole process, which is the personalization element. So one main pillar is this to get started. And the second pillar is the guidance through the whole investment journey with tools and insights that you can utilize, because your portfolio is something dynamic. So as you make changes to your portfolio, we give you all that information you need on every change you potentially make to make the decision that fits more your interests.
Being an advocate of people at least starting to invest, that no matter what you invest, if you're already starting to invest, it's a big deal. And I remember talking so much about, what we need is education. People need to, understand, blah, blah, blah. You're doing education. I see that your posts that's a trend in your posts on social media, but it feels like you kind of educate yourself by doing, right? Was that something that you had in mind, the educational part, or skipping the educational part?
It's exactly as you described it, George. So for us, it's one thing to educate users through articles and learning guides and everything. And the other and more important is that because our users don't have hours and hours to get sophisticated investors, is what we call hands-on education. So the full guidance that you get while you use the product. So interactive guidance and hands-on education. As you have probably noticed, since you use the app yourself, at every single step, there is an explanation of what this means and how this looks like for your portfolio. Besides that, it's something that it looks very easy to create a portfolio through WealthyHood. Follow a few simple steps and like 10 total clicks to add your personal preferences. We have taken away all of the complexity of the financial market. So consider a few things. What if you have selected one theme, but you have no idea about which ETF to pick to express this theme? We have done this for you. You don't need to know that, but we have done all the work for you. So essentially, we guide you through a very smooth process. We're opinionated, so we have done all the due diligence you need. We have structured a formal way of creating a portfolio, but still a very easy way. And yet you get a very well diversified portfolio while you sit on control seat.
And just to add, one thing that we had in mind when we were building the app is to be able to answer to that simple question that many of our friends had when it was about investing. How do I get started? That was something that everyone was asking. I have 1,000 pounds, 2,000 pounds. How do I get started? What do I invest in? So that answer, we essentially reflected to the user experience we built in the app. So the outcome through that process is not only to end up with a portfolio that matches your interests and your preferences, but also to learn through that process that we've broken it down into some simple steps that you follow.
I want to go a little bit behind the scene and talk about the tech and also the partnerships that you have. Because as I noticed, as I got started, there's a partnership with TrueLayer, which is open banking. And that's where I start. That's an easy way to send my money in. Can you tell us a little bit about those partnerships and how do you go about building your app and your technology?
Yeah, so we are utilizing TrueLayer for the open banking side of things, and essentially for the users to be able to link their bank account and execute payments in the app. That's the open banking side. And we're using Wolf kernel for client money holding and the custody of the assets. Both are very important because essentially they focus on building the infrastructure of the fintech infrastructure of the platforms. So that abstracts all the complexity that those processes involves and makes it very easy to us to not have to deal with that and focus on a very good user experience, which is what we do.
How was the process about deciding whether to build, rent, or buy some kind of solution?
Yeah, it didn't come overnight. So essentially, this also comes from our time in the previous startup. We found Daedalus. Essentially, Daedalus was an investment platform for private assets, for VC funds, hedge funds, and private equity funds. It had a blockchain component and essentially tried to fractionalize such investments and make them available to everyday users. I'm saying that is that because this was a much more complex value proposition in terms of the structure, we spent so much time exploring all the different options to do that. We considered building many multiple entities in Luxembourg or Ireland or Cayman Islands, every potential different solution, nominee structures and everything. So by the time we founded WealthyHood after Daedalus, we were kind of experts on what works and what doesn't work. And we had also built these strong relationships with partners when we tried to explore what would work for the previous. So at this stage, it was very easy. We followed the first partnerships within 1 or 2 months. We kicked them off immediately, and we knew exactly what we needed, both on the legal and compliance side, but also on the operational side. The previous experience was very important for that. Essentially, the investing space for the mainstream assets, it's quite commoditized. You just have to pick the right partners that make it easier for you and absorb the complexity for the users.
If we look a little bit more ahead at your outlook on the wealth management and investing, one thing that you mentioned is that you are rationalizing investing. And also your name, WealthyHood, I didn't ask before, but there's an obvious reference, which is Robin Hood.
Yeah.
And it seems to me that what we've observed with Robin Hood and other things is that people are not just investing for returns, but for fun, or sometimes for more meaningful things. I don't know, change the world or participate in a community and stuff like that. How do you take that into account?
Yeah, so this gets back to the argument I had at the beginning, why we started WealthyHood and the problem we wanted to solve. So essentially, Robinhood and the other trading apps came to democratize investing. It was very expensive for users with a few hundred or thousand pounds to get started due to the commissions and the minimum capital requirements and all the rest. So these apps made it easy for them to participate in the stock market. This didn't turn out very well because all these trading apps make money as their users trade more and more. So they want to incentivize them to trade more, increase their volume, so to produce more money in commissions, spreads, or payment for order flow, depending on how each of them makes money. Along the way, all these guys try to replicate the casino experience. So they try to make it look like a slot machine, especially when you are getting your free stock and all the rest. So they activate the parts of your brain which are more related to gambling and to trying to become millionaire overnight. Essentially, it's what we mentioned. People are not buying stocks only to create wealth and grow wealth over time. They buy it for fun, and after that, they buy it to increase their adrenaline level or to brag to their friends that they bought this stock who turned 5x. So this was a huge problem that started with a good cause to democratize access to the stock market, but ended up to creating some terrible problems with making actually most of the retail investors out there gamblers without any focus on the first investment principles.
Yeah,
As you both mentioned, there are the different kinds of investing, let's say more broadly. The fun part that you both mentioned and the investing for the long run. I'm not going to say whether there's a right or wrong. Many people do both. Personally, I do both. It's one thing to invest for fun. It's another thing to invest for the long. At WealthyHood, we build an investment platform that's focused to users that want to invest for the long run over time. There are other platforms that have a better experience regarding the investing for fun. But definitely investing for fun and having some huge returns overnight, it's not where you will put a large part of your savings. So it's two different separate things.
yeah. There's also something to be said about the golden days of Robinhood and it's also because the macro environment was such that indeed all the stocks were going up. So perhaps it was more fun than today. I guess people understand a lot more about rationalization than fun and how to not mix them up.
Yeah, exactly.
Now, going to the instrument. So you've made a choice of using index tracking, I mean ETFs mainly. How do you look at across asset classes? And you mentioned that you were before involved in alternative assets. Do you think that's something that can be part of in the future of the WealthyHood experiment? Or do you think you'll be always focused on this most rational and most let's say core part of the portfolio?
Yeah, that's a good point, actually, George. To be honest, having explored both worlds of active and passive investing, I would say I'm a big passive investing fan. And fortunately, the stats are in my favor. So if you just consider that more than 80% of active professional fund managers don't even beat their benchmark or the market after you take out fees, then it's no-brainer that passive investing is here to stay for the long term. There's another argument into this one. The argument has to do with your investment horizon. So if you want to invest for the next year or the year after, have a short investment horizon, chances are you are probably better off with a market neutral approach. A decent hedge fund or an active manager who may generate alpha or beat the market if you want not to lose money within 1 year. But if you're investing for the next 20 or 30 years, when you can afford to have 2, 3, 5 years of negative returns, then the power of compounding is in your favor. And it's big time in your favor if you invest passively and stay invested for the long term. So active managers may be more appropriate for people who want to have their money at the place and have some alpha or market neutral returns. But for long-term investors, they definitely don't need to waste money on the fees. They don't need to sacrifice returns for hedging and for safety. So definitely better off with passive investments. Now, having said that, I think that for Wealthyhood, we are going to stay with a passive investment model, essentially do it through ETFs, but we also plan to add individual stocks. But actively managed funds, either mutual funds or actively managed ETFs or hedge funds, are not a priority, and I can't see how this may happen in the future.
And if we now look at your approach to grow and where you think you're heading, first of all, yeah, can you tell us how people find you and how people sign up to Wealthy?
Yeah. Obviously, there are different ways to do that depending on the stage of the company. Our first few hundred users essentially signed up to a waiting list, and it was through some social media activity we did, and then some referral schemes, word of mouth, and ambassador programs. At the moment, we're very focused on building our presence on social media and building the WealthyHood brand. And at the same time, we're using performance marketing methods to grow that audience. So it's a combination of organic methods and social media presence. We're running different kinds of experiments, but at this stage of the company, we're mostly focused on those two.
Yeah, just to add on that we would love to have a blend of different strategies. So word of mouth is one thing. It may come, as Kostas said, from our ambassador scheme. We're now launching a growth hinter scheme for the audience who wants to join, just reach out, and referral scheme. And then we do have the traditional marketing strategies. And as the company grows, we will focus more on product-oriented growth.
Yeah, actually, I should I should add as well, for full disclosure, that we did a collaboration with my channel, Fintechorama. I could track the sign-ups, and it was lovely to see people signing up. But it's always interesting to have an overview of how you grow and what you see as the main levers for growth. And so can you tell us as well a bit about where you are at the moment and the next phase?
Yeah. So essentially, we launched the company like a year and a half ago. It was a bit tough in the beginning. We need to sort out everything about getting regulated. We are now putting in place the right partnerships, as we discussed. George, we have now launched the web platform of the app. We launched it in November. We already have a few thousand users using the app, creating portfolios, investing, and then using our tools to optimize their experience. And we're now focusing on launching the mobile app in the coming months. Unfortunately, we're now available only to UK users, so you have to be a UK resident to use Wealthyhood as an investment platform. Everyone can create a portfolio, but in order to invest your money, you need to be a UK resident. But we do have plans to expand to the European Union version. And by very soon, we want to be in many European countries by the end of the year, and ideally by the end of Q3.
Yeah, main things to expect from us in the following months is mobile app and launching the European countries. And we're both very excited about those two.
And if we look now in the future, so obviously it's 1 year on, so it's very early, but how do you hope these users that you're onboarding now, how do you see it evolving?
Yeah, so essentially, we're building an investment app with focus in long-term investing. So it's a way for users to build their, invest their savings, build their pension themselves. I would say I wouldn't limit it to pension only. Different users have, different horizons in how they build their portfolios. It can be a 5-year portfolio, 10 or 20-year. It can be saving to buy a house. It can be saving for your child's education. The main focus in the user experience that we're building is long-term investing. And I think that fits different types and profiles of users. Not necessarily the pension is one thing.
I could see that from the financial advisory point of view. This is something that can be improved, having experienced myself to have to sell my stocks at the wrong moment for buying a house that eventually didn't happen. I don't know if that can be translated into an app, but maybe you have a point of view.
I think it can be translated to an app. So essentially, if you think your house is one asset, while you can easily create a portfolio of 1,000 or 2,000 diversified assets that work together and complementary to each other to create a much more robust performance, then I would say it can be translated to an app. It has to be translated to an app, and this is what we're actually doing in WealthyHood.
Yeah, I was just about to say that essentially I think that as the product matures and we're able to support that, I think we're going to see many individuals have very different goals, and those goals be reflected in the multiple portfolios they build. So it's going to be one portfolio for their pension, another portfolio for buying a house, another portfolio for saving for their children. So I think we're gonna see that reflected in the app.
Yeah, actually, that's a very good point, because typically it's not that rational to share the portfolios because of the trading costs, etc. But I guess with you, it doesn't make any difference in terms of the running cost, or very little difference.
It doesn't matter, yeah. It makes no difference.
Yeah, this a very interesting perspective. Okay, that's wonderful to hear, and I think this is really important when you think about the future of investing. And how important can investing be in our lives? I'm very pleased to see something that will not just help investors in their decision of investing, but help people becoming investors at any stage of their life. So congratulations on that, guys. Just to conclude, I ask typical questions. The first one is, what would you do if you were to choose a different career path?
I cannot share any specific ideas, but I think I would definitely be a founder. If not, I would like to work on the other side, the VC space, or on startup boutique studios or stuff like that.
Gotcha.
Yeah, I think I would still be a software engineer. It's something I love. I love doing, but overall, I love working and building products. So I think I could be involved in other aspects of product building as a product designer, for example. And I'm also very interested in startups generally. So as Alex mentioned, I think I could also be on the dark side of VC. And yeah, obviously, founder in another startup. It's what we already do.
And then the next question, how do you invest personally?
I'll take this one first. Actually, I'm very honest because I'm actually using WealthyHood as my main investment platform. So I do exactly what I do actually do that. So I have built a portfolio with the basic trends that I really believe will evolve in the future. I have also posted my portfolio on LinkedIn. So if anyone wants to have a look, feel free to. And I just make sure that I invest a specific sum of money every month. Because we're founders, and as you know, cash flow is not the best thing for a founder. It's not very high, but even the limited ones that try to invest systematically on the same portfolio. And except that, so 90% of my money goes there, of my investable money goes there. And there's 10% which is more fun investing, which I'm very conscious that it's done for fun. So we have some individual stocks in my portfolio, very few cryptos, but it's a different mental account. One is investing, the other is fun and adrenaline investing.
Following the same principles as the basic idea of how I'm managing my savings, the largest part goes to long-term investing. And I'm also using WealthyHood, of course. It's something that we build, first of all, to solve our own needs, satisfy our own needs. So part of that goes there, long-term investment portfolio, and then it's the part that you invest for fun. And I'm invested in some individual stocks and also keeping an eye on crypto and NFTs.
I thought it would be a fairly easy, but well done. I think that's absolutely the answer I was expecting. It's been wonderful, guys. Thank you so much. If you want to add something, please do. But otherwise, we will also put all the links to WealthyHood in the description of the podcast so people can find you.
Thank you very much for having us, George. I really enjoyed our discussion, and keep up the great work.
It was great speaking to you.
Thank you very much,
Pleasure
guys.
to be in your show.